Good day, everybody. I'm happy to present to Canola Week again this year and to speak to everyone about canola processing expansion in Canada and some of the investment drivers and opportunities that we see coming our way over the next 4 to 5 years as it relates to expanded crush and opportunities for the canola value chain. I think many are aware of the expansion announcements that took place earlier in 2021. And it's really been an unprecedented suite of announcements with regards to expanded crush this year. As you can see on the map, the investments are centered in Saskatchewan, and we have expansions announced by Richardson's in Yorkton. We have new builds in Regina by Cargill and Viterra. And then we also have a new player with regards to potential crush in Canada with Ceres Global and their announcement in Northgate, Saskatchewan. Combined, these 4 companies' investments total roughly $2 billion. And I'll unpack some of the other opportunities that are related to this expanded crush in subsequent slides. The next slide talks about the canola production and crush that has occurred over the last number of years, and of course where we see the crush projected going out to 2025. So as you can see from this slide, there has been strong growth in the canola value chain over the last 20 years, whether it's on crush capacity, actual crush volumes, and of course canola production. So in 2020, the capacity for crush was approximately 11 million metric tons a year. And what was actually processed or crushed in 2020 was 10.3 million metric tons. In 2020, we had nearly 19 million metric tons of canola production. So when you look at crush relative to canola production in 2020, it was about 57% of total production. So more than half of what is grown in Canada is processed in Canada. By 2025, based on the announcements that were made for expanded crush earlier this year, we see capacity growing to 16.7 million metric tons. So that's a 5.7 million metric ton increase from the current crush capacity, representing a 50% increase in crush from where we currently stand. If we assume that the processing facilities can operate at approximately 90% of capacity, we would peg actual crush volumes by 2025 at roughly 15 million metric tons. We do hope and we have confidence in the canola industry's ability to produce more canola. We, of course, as a value chain, have a target of 26 million metric tons of canola production by 2025. And if we see that production come to fruition and we see the crush expansion come to fruition, the amount or the percentage of crush by 2025 would be 58%. So what I'm trying to explain here is that although we see a large amount of crush expansion, as long as we do continue to see the production of canola increase as well in this country, we still are roughly processing approximately half of all of the canola that is grown in this country. So essentially, crush expansion aligns with the value chain and the Canola Council's goals out to 2025. So I often get asked the question, what is driving all these investments? Again, to my earlier comment about 4 investments totaling $2 billion all occurring in a single year, I get asked the question, what is driving this? And fundamentally, it is the global demand, growing demand for oil and meal. And this chart demonstrates how we have seen a positive trajectory for growth in terms of canola oil exports and domestic use, and the same on canola meal exports and domestic use. So this is fundamentally what is driving expansion for value-added investments. But again, what's really the catalyst behind 4 major expansion announcements in a short amount of time? And the catalyst for such a surge in investments and value-added announcements is biofuel demand. So this chart demonstrates biofuel demand, just to give a picture of what is driving it. And when we look at the United States and in Canada, there's something called low carbon fuel standards. A low carbon fuel standard is a regulation that mandates liquid fossil fuels to have a lower carbon intensity or carbon footprint over time. And the oil and gas refiners are obligated to meet that mandate to reduce their carbon intensity. And one of the primary means for them to achieve a lower carbon intensity in liquid fossil fuels is to use more biofuels. The best example to point to with regards to how these low carbon fuel standards have driven demand for biofuels is in California. This is the graph on the left-hand side of the screen, and it shows that since the inception of the low carbon fuel standard in California in 2011, there has been a marked increase in biofuel consumption in that state. And in particular, I want folks to look at the green bar on the California biofuel demand chart, which is renewable diesel. It is that growth in renewable diesel in particular that has really driven overall biofuel consumption and demand in that particular state. The chart on the right is a demand scenario for what we hope can be replicated in Canada. The Canadian government is developing its own low carbon fuel standard called the Clean Fuel Standard or Clean Fuel Regulation. And if we see that particular regulation designed properly, there's certainly potential to see a marked increase in growth for biofuel demand in Canada as well. So when you look at the chart below, again, these are just scenarios, but if we look at low, medium, and high demand scenarios for bio and renewable diesel demand, there certainly is a lot of opportunity to see growth in biofuels and in particular bio and renewable diesel in Canada as well. So summing it all together, again, these are estimates, but to paint the picture, I guess, for what the potential is for biofuel, or for rather biodiesel and renewable diesel demand in Canada and the United States combined over the next number of years, there's an expectation or a possibility that we could see a 50% increase from biodiesel renewable diesel demand in 2020. By 50% increase out to 2030. So from approximately 10 billion liters of renewable diesel and biodiesel currently consumed in Canada and the US, growing to 15 or just over 15 billion liters by 2030. So the demand picture is starting to crystallize. There's a lot of optimism with regards to that growth that I showed on the previous chart. But what has the supply response been to date? And there's a lot of exciting things happening in North America as it relates to starting to build out capacity to meet that growing demand for renewable diesel and biodiesel as well, but really wanting to focus on renewable diesel at the moment. The chart on the left is the projected growth for renewable diesel production capacity in the United States out to 2024. This chart was put together by the U.S. Energy Information Agency. They compiled information with regards to investment announcements over the last 12 and 24 months from different companies who are making investments in the space of renewable diesel production. And it truly is remarkable to see what that growth is projected to be over the next 3 or 4 years alone. So currently in the United States, renewable diesel production capacity is just over 1 billion gallons a year. By 2024, that could grow to approximately 5 billion gallons. So a huge exponential increase in renewable diesel production capacity is possible over the next 3 to 4 years. Not to be outdone, Canada is also starting to respond to that potential demand that we see coming our way for bio and renewable diesel. And we've started to see some announcements in Canada as well as it relates to increased capacity for renewable diesel production in this country. At the moment, there is no existing production capacity for renewable diesel, but by 2024, we can go from 0 to nearly 2.5 to 3 billion liters. So in the next few years, there's certainly the potential to see some of the production capacity increase in this country as well. So when you add it all up, what does this fundamentally, mean, or what is the potential for canola demand as it relates to using canola as a feedstock in biofuels? And the chart that is in front of everyone attempts to paint a picture. Again, these are scenarios, these are projections. None of this is set in stone yet, but it is certainly possible that we can see a 4-fold increase of canola utilization in biofuels in Canada and the United States. So currently, about 2 million tons of canola seed are used in biofuel production in Canada and the US. And by 2030, if the biofuel demand all comes to fruition, as I explained on the previous charts, we could see that increase 4-fold to approximately 6.5 million metric tons of canola seed by 2030. So what are the opportunities with regards to that increased demand for canola and obviously the requirement for processing to produce the feedstock that goes into that biofuel? I just want to show this chart or this slide to paint a picture of what the opportunities are when it comes to value-added processing. And first and foremost, it's more competition for canola seed, which raises the overall value of canola. It also increases delivery options and flexibility for farmers. It's a terrific market diversification tool in terms of having the opportunity to sell our value-added products into a new and growing market when it comes to biofuels in North America. And when we talk about market diversification, it does provide better value-added marketing opportunities for both the oil and the meal. More value-added investments in this country supports value-added production and job creation in Canada. It encourages investments and innovation in canola varieties and agronomic practices. And lastly, as I've been talking for the last 5 or 10 minutes about biofuels, it supports those Canadian biofuel investments and ultimately the country's and the world's goals to reduce greenhouse gas emissions. So how do we capitalize on these opportunities? So I talked a lot about the announcements that have been made. I talked a lot about the potential around biofuel policies, but how do we bring this potential home? How do we capitalize on these opportunities? And from our perspective, there's really 3 key elements that the canola industry needs to focus on as it relates to capitalizing on these opportunities. Number 1 is maintaining a competitive and predictable regulatory environment in Canada. In particular, the biofuel policies that are under development in Canada and in the United States must create a meaningful and long-term demand signal. Number 2, growing canola supplies. The productivity increases for canola are absolutely essential. We need more canola to feed these value-added processing investments, to bring all those opportunities back to farmers and the value chain. And we need to have access to tools and technology that support improvements in canola yield. And we also need a commitment from government in public research that also supports productivity increases in canola production. Thirdly, and lastly, market access and market development are critical. Maintaining market access in existing markets for oil and meal will be important, and we will need to find new markets for canola meal. The canola oil, we hope, does find a home into the biofuel markets, or it also has an opportunity to continue to be an important product used in food applications in North America. But we need to really understand and begin identifying new markets for the canola meal that is produced from crushing the canola seed. I thank everybody for your attention and again, the opportunity to present, and I look forward to taking any questions. Thank you.